You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz, and it's 9/22/22. We want to get an insight into where the markets are, where they're heading, and we're with Chris Vermeulen, thetechnicaltraders.com. Highly recommend you go take a look at the site. Chris, great to have you back on. You're going to share some charts and screens with us, and just tell us right now your take where stock markets are at, dollar, interest rates, gold, silver, and oil, and whatever else you're watching.
Sure. Yeah. All right. Well, thanks for having me back on the show, Kerry. We'll jump right in here. I'll show you some charts. And I mean, we've seen quite a bit of selling since the kind of the August peak. And there was a really nice move up there going into the August peak, and then suddenly just fizzled out. The markets rolled over, and we started to get a little bit of a rally going into the last couple of weeks here with getting into some news. And then, of course, the market rolled over, the big down day. The Fed hit again yesterday, which was Wednesday, and we're just really seeing sellers continue to bleed out. I use a few different things on my charts to get a gauge of what investors are thinking and feeling. And I like to watch panic selling on the New York Stock Exchange. I watch the volume flow, and we've been seeing that get above a threshold of 3, meaning there's 3 shares being sold on the bid to every 1 person buying on the ask. And when it's sold on the bid, that means people are hitting like the market order, which they just want out. They're just forcing out, and they're willing to take a lower price. So that has been elevated for quite a while. We've seen some big waves of panic selling, and that typically means we are in a very strong downtrend. On the other side of the equation, I like it to look at some other sentiment, which is really comparing different assets against each other. And it tells us if money's flowing into defensive sectors, like is money flowing into gold or into stocks? Which one is performing better? Or into the stock market versus utilities? And there's a bunch of different intermarket kind of relationships that if you look at them all, you can get a feeling of what the big money is doing. And we are definitely seeing investors, especially in dividend stocks, which are the general masses of investors, really starting to panic and sell out. Dividends were the biggest down kind of group yesterday, the previous session, telling us that we're seeing really they're starting to call their advisors. They're starting to liquidate positions. They can't take the selling anymore because bonds just keep selling off. Equities keep selling off. They have no relief, long-term buy and hold investors. And so they're starting to panic out. And there is a silver lining. When they start to panic out, it's usually when we find an actual a bottom in the market. At this point, I think it'll be a short-term bottom. It could be a multi-week rally like we saw from July through August. I don't think it's anything going to be huge, but we are definitely at panic levels that usually give us some type of bottom in the market for a tradable bounce. So it's going to be really interesting, but people are definitely liquidating. We're in a distribution phase for stocks, meaning institutions and investors are naturally just selling off positions each week.
All right. So they're even selling dividend stocks, huh?
Yeah. And yeah, that just goes to show us the mindset of the average investor. And usually that means we're ready for a bounce. The average investor is the last one to sell out in each downward wave. So I think we're getting close to a tradable bounce in the stock market, but dividends are under pressure.
So you think it's oversold or what?
I do. I mean, if we look at the NASDAQ here, let's just pull up
Sure.
the NASDAQ chart. We'll look at the daily chart real quick. And whenever we get panic selling in the stock market and we get these levels of oversoldness in the market, we can see that we get these very strong rallies. The NASDAQ rallied. This was a similar situation over here. The stock market rallied, almost 7% in 3 trading days. We had another one over here. We saw a 12% rally in the stock market. We had another one over here. We actually had one just a few weeks ago. That was another 9% move. And we're actually getting back into one of these oversold levels where we could see a 5 or 8 or 12% bounce. And this is the tradable bounce I was just talking about. I think there's a little bit lower pricing to go. I think there's still a bit more fear because the way it works is the Fed came out really hawkish outlook. Everybody dumped stocks. It was bad news. People are already nervous. And typically the Fed can kind of tip the scales and create one final flush. And right now, when we have news like that and it's negative news and a negative trend, the average investor hears about it when they come home from work that day. And then some of them take action. They call their advisors or they liquidate their positions the next day at the opening bell. And those who are a little bit more behind the ball will hear from their friends a day or two later saying, yeah, I sold my positions. I'm out of the stock market. I can't take it. And then the next wave of people get out. So I think we still have another day or two of downward price action, which will bring the stock market kind of down into this area, which happens to be a major support zone from back in June when we started this last half decent rally. And I think from there, we could get a really nice 5 to 10% bounce in the market. So that's kind of what I'm seeing from a short-term standpoint based on the current sentiment and support and resistance levels on the charts.
So it's amazing how these things just follow patterns. And as usual, the individual investor is the last one in the burning house and the last one out.
Yeah, unfortunately, it's the way it always is. No matter how much I try to help everybody, I mean, it's just, it's painful to watch, and I get emails about it all the time. It's tough. The markets know exactly how to pull the average investor's strings and make them trade and do emotional moves. It is a pretty sleek machine in that regard.
So, what did you think of last week's options expiration meltdown?
Yeah, I mean, I guess that was triple witching or quadruple witching. I don't remember.
Quad witch. Yep.
Yeah.
Unbelievable.
I mean, it's amazing. I was talking about it with subscribers the other day. There's like this max pain number. I don't know if you've ever heard of it, but the max pain is in the options market. It takes all the current options on any given asset or ETF or market, and it runs the numbers to say, okay, if the price of, say, the SP 500 comes down to this level, it is going and expires at that level, it's going to create the maximum pain, the most losses among all options holders for that particular asset. And it is amazing how the market has a way of working. Sometimes it's so far away from the price, but by the time options expiry comes, even if it's only a day or two away, it's amazing how the market can pull itself to that level, create, the maximum pain, slaughter everyone who's, been trying to leverage themselves up in options, who are trading on emotions. And I think that's probably what we saw once again. I mean, it happens over and over again. There's weekly expirations, bi-monthly, monthly, quarterly. I mean, it doesn't matter what it is. This max pain number, if you ever look it up, max pain for options, it's pretty neat to follow.
And, there's been an interesting trend on options X over the past, I'd say 6 months, 8 months, where gold gets slammed during options X. 3 out of the last 4 options X got killed.
Yeah. I mean, we all know gold is pretty manipulated, and I mean, it's bouncing major support. When we look at this chart, let's go way back here. The weekly chart is probably the best one, but this is good enough. Just look at this critical level that, gold is just hanging on to a thread, major resistance, major support, and it is kind of eating through that level. And if it breaks, I mean, there's potential for this to go all the way back down to about 1,300. And that is going to, anyone holding and hoping and holding is going to get really, really hurt, especially if you're in the miners. Everyone says the miners are oversold. They're ready to bounce. And I think they might have a bounce with the stock market, but it might only be a 5 or 6 day bounce, maybe a couple of weeks. But I have a feeling, the precious metals market is actually, if this fails, it's going down quite a bit, and it's going to cleanse itself. And that's probably also going to mean the stock market itself is breaking down, and we're going to go deeper into this bear market, which all these things in the grand scheme of things are good. It's going to cleanse the market. It's going to reset. And then we're going to go into another 5 or 10 year bull market when all the dust settles. But that might not be for another 8, 12, 24 months going forward. So there's going to be a lot of volatility, a lot of pain for those who buy and hold or don't have a game plan to get out to avoid some of this stuff.
On the other hand, silver has been showing some strength and appears to have bottomed, perhaps.
Yeah, I was talking about that this morning. It's got a nice little bull flag forming. Let's just zoom in here. It definitely has had a nice pop and squeeze to the upside. It's flagging sideways. Typically, a bull flag is a bullish sign. It means we're going to go higher, but we got to be really cautious because the overall trend remains down. I mean, it's still a series of lower highs. It's still a series of lower lows. And, this market really needs to figure out what it's going to do. We saw a nice bull flag back over here, and then it popped up and flagged out again, ready to go higher. But instead, it rolled over and died and created a bear flag. And so this has potential to pop up to about $22 an ounce. But I mean, the odds are still telling us that sellers are going to step in, they're going to drive the market down. And that's kind of still what the chart is pointing to. And I think right now the market's trying to, suck traders in to get them excited. This is what gold and silver and miners do all the time. They'll start to hold up. They'll have a bullish pattern, and then eventually it rolls over and kind of continues the trend that it's in, which is to the downside. So I'm not excited about it. It could be a fake out type of move because it really needs to clear 21 and hold above it for more than a day. And then it could be something interesting. But there is a ton of resistance up here in this 22 area. And the 22 area is going to be its measured move. It's going to be resistance. Naturally, there's going to be sellers stepping in there just because the momentum from this rally and this pause will stall out at that level. So I'm not overly excited on the precious metal sector at this point. If anything, I think the breakdown and a big cleanse will be more of an opportunity than trying to play the long side right now, because once the market does break, it's probably going to, get pretty wild, and there's going to be a lot of downside potential. Gold miners have a tendency of falling, 80, 95% and lingering for a long time. And they could fall a long way if gold was to drop down to 1,300. So even though they look like they may be bottoming, they're probably far from a bottom, because a 1 cent stock can still lose 90% and drop down to a tenth of a penny. So it doesn't matter what it looks like or the value. It can always be cut in half and then be cut in half and cut in half. And people don't seem to grasp that concept that something cheap doesn't mean the risk has been reduced. It can always still lose more. Yeah,
it can always go down more. Hey, so looking at energy, what do you see in there?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, when we take a look over at crude, I mean, it's definitely struggling to get some traction here. It's these moving averages, the 50-day, the 20-day, they're kind of just like railroad tracks. They're moving down, and that usually means the trend is down. Same scenario when the trend is up, they'll be railroading beside each other up, and then usually you have some blow-off phase. This was obviously the war, but typically in a trend, you get some washout move at the end. So I'm kind of waiting for some type of washout, some panic sell-off, and then it might put in some type of bottom. But right now, the energy sector's definitely struggling. We look at crude, it's in a downtrend. If we look at natural gas, down 5% today, which is normal for natural gas at this point. It looks like it might be putting in a top, and it looks like it's just starting to break down from a potential head and shoulders pattern right here. If we draw a neckline and then you've got a shoulder, you've got a head, and you've got a shoulder. Typically, the distance from the top of the head to the shoulder is the downside potential when it breaks. So there's a lot of room for natural gas to fall back down to 550, which is a previous low. So both of them are moving lower. Natural gas got a lot of room to go. A good way to get a gauge on it is I like to look at XOP, which is the natural gas and oil exploration. It's almost like the miners of, the metal sector. But the miners more or less for the energy sector. And they're starting to show a little bit of weakness here. When we look at the overall trend, it was up. We had a nice level here, but now it's kind of broken down. It's kind of rallied up, and it's making a series of lower highs. It's got lower lows. And so it's showing a little bit of a weakness. And I think it could continue to trend lower here over the next little bit. Just keep in mind, when the stock market bounces and rallies, which we talked about earlier with the NASDAQ having a 5 to 10% bounce, all of these sectors will have some type of bounce. So I'm expecting the market to have a bounce, which will bounce the energies, which will bounce miners, which should bounce gold off support. And it might be like a false, people might get overly confident thinking, oh, this is going to be really good. But generally, almost all assets follow the broad market. So if the stock market in general is in a bear market and heading lower, and it's just a short-term bounce, these short-term bounces in all these other sectors and assets should be seen as the same thing. Take your profits, protect your positions by moving your stops up, because it's most likely going to roll over, break down to new lows, and then keep on falling. And that's, people tend to think that, the sector they're in is going to buck the trend. And it might do that for a couple of weeks or a few days. But if the market keeps going down in general, it's going to pull all those assets down, and you've got to be very defensive right now. It's about capital preservation. Try to make a little bit of money with low risk, not stick your neck out there and take some big swings for some big bounces that you think might happen.
Yeah. Okay. So, interest rates. What is the interest rate tea leaves telling us?
Yeah, I mean, interest rates, bonds, they kind of have a very similar, obviously just an inverse chart. Rates just keep going up. People are getting nervous. Bonds, let's just take a quick look over at the bond chart, because it's the opposite. I prefer to follow bonds. You look at what bonds are doing. It's just continues to bleed out and move lower. I think as fear keeps creeping into this market, and the Fed keeps doing what it's doing, we're going to continue to see the bond market be under pressure. We're going to continue to see yields rise, and we're going to continue to see fear really spike. I mean, unfortunately, this is like the worst case scenario. I just did an article on this, like the worst case scenario for, anyone who has money invested, large sums of money, especially if you're like 55 plus years of age, because we're going into potentially a multi-year bear market, or at least a bear market that will take multiple years to recover to get back to break even. And we've seen bear markets and recoveries take 5 years, 12 years, 17 years, depending on the index. And if you're 50 or 60 or 70 years old, the last thing you want to do is wait 10 years to be able to pull your money out. And if you pull money out when it's in a drawdown, burning through it in retirement, it's one of the worst things that you could do. You're going to burn through your money. You're going to outlive your money, which is what everyone's major fear is. And we're in that perfect scenario right now. This is the worst case scenario because bonds are under pressure, stocks are under pressure. This could take several years to recover. And I think there's a lot more downside. I think the stock market could actually fall another, believe it or not, about 45% from where it is. That's the SP 500. And that means bonds are going to keep falling as well. And, one of the biggest groups of the population of investors are baby boomers and retirees. That's where most of the money is. It's a huge group of people. And they could get literally, their nest eggs chopped in half. And suddenly they're going to have to start subsidizing, looking for work. And now we're going to go from, you can't get any work. You can't get somebody to work for you. It's almost impossible. You got to pay huge rates and nobody even sticks around. The quality of work is really poor. We're going to go the opposite. Everyone's looking for a job. Baby boomers back to work. But companies will be laying off because we're going to be we're in a recession, depending how you want to look at it. We're going to go from one extreme to the other. Huge returns. You can't find anybody to work to. Everyone's losing money. Everybody's looking for work. It's a doom and gloom kind of scenario, but that's what the markets are setting up for. And it is really, really scary. And it's going to hurt the most people. The markets have this way of doing it. And it's going to be boomers and retirees in the buy and hold strategy. If this scenario plays out, it's the worst possible thing that could happen. It's way better to sit in cash, step aside, preserve capital, or profit from the collapse, which is an amazing opportunity that I focus on, than it is to ride it out and have a life-changing effect. So that's kind of my focus, is preserving, try to earn some money while the market's moving down, and go from there.
Either way, it's going to be life-changing, whether it breaks you or it makes you. It's going to change your life. It's one of those situations. If the market is going to go into this prolonged decline, we're going to have mass bankruptcies around the world. I think it's already starting, Chris.
Yeah.
Companies just going to going flat out bust all over the place.
Mm-hmm.
And
that's scary.
That means a debt crisis, a debt collapse, where large amounts of debt, both consumer and business and government on the books, just go kaputski.
Mm-hmm. China's ahead of us. They're struggling. And
well, that's one area I want them to be ahead of us on. You couldn't make this stuff up, Chris.
No.
Yeah, it's kind of shocking, but I guess we'll see. We'll make it through. Humanity always finds a way, and
for sure.
Maybe it's a war. Who the heck knows? Hopefully not a world war. Well, we appreciate the insights into the market, Chris. We will touch base with you in a month or so. Make sure you go over to thetechnicaltraders.com. Check out the latest offering there. What's the deal? We got a free trial there?
No, we don't have a free trial, but we have a free newsletter, which is great because you get to see what's going on in the markets. We keep you up to date. I do share some of the members area. We just posted a video that I share with subscribers, which is really insightful. Actually covers some of the stuff we talked about today. So it's pretty good, but we focus on trading using ETFs, avoiding market collapses, avoiding bear markets, and profiting from them. It's all about preserving capital and safely growing our account with really low volatility. And that to me is what investing in trading is about. I don't want to ride roller coasters. I want to just kind of, chip my way to wealth, more or less.
Yeah, well, roller coasters, they've had a real problem with due to the obesity epidemic. In Disney World, a couple of years ago, they had to upgrade all the motors on the rides because they couldn't get to the top of the hill. But that's a story for another day. Chris, appreciate it. Hey, if you got a question for Chris, email address is kl@kerrylutz.com. Make sure you sign up for free newsletter at financialsurvivalnetwork.com. Just sent one out. And like to get your feedback. How are you dealing with this market crisis, this market meltdown? Have you changed your strategy? Have you left gold? Are you in cryptos? What are you doing? That's the question. And we'll definitely get back to you. Thanks, Chris. Talk to you soon.
Thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.